when the Fed's cutting rates and when it starts to cut rates, that's generally a bad time for the market. So again, we talked about the last time they started cutting, September 07, the market fell like 50% from there. In the prior recession in 2001, when they started cutting, the market fell another 40%. And the other times when it did work, that was when the market had already started to fall, when the growth was already much worse, and then it was kind of too late from that perspective. So
what if this is an insurance cut?
So this would be out of the realm of anything the Fed's ever done. The Fed has always been lagging.
Well, no, 98. 98 was an insurance cut.
Let's talk about 98 as an insurance cut. Yeah. What was the ISM in 98? You know, it was like well below 50, and right now we're
in 95 it was too.
Exactly.
There was more fundamental.
They say preemptive cut, but the growth story was less preemptive to me than it is today.
98, you had the
Asian financial crisis, the Russian debt crisis, and you had long-term capital. There's a lot of stuff going on then that you don't have today. The market's at all-time high, as Mike said. So I think it's a very different story to say.
What if we said if the Fed reacts in a panic, in other words, not to fundamental weakness, that things can work out okay? But when they react to fundamental weakness, I'm just trying to come up with a rule of thumb. Let me finish the thought, which is when they react to fundamental weakness, the Fed can offset some of that weakness, but it cannot get rid of it.
I completely agree with everything you just said. I think that the markets are giving the Fed too much credit, and I think you would
their
agree
ability
with that.
to offset what's
exactly their ability to offset the weakness that you're seeing. So even if things are as bad as the market thinks it is, to the point where we need that Fed cut, I don't think the Fed has the ability with a couple 25 basis point cuts to really reverse that situation without benefit of fiscal stimulus as well, which I think is a tougher
If I could just recap that, because Mike, if this is just a trade thing, remember that was my question to Powell was, is this just a trade thing? Yeah. He said no. But if it's just a trade thing, the Fed cuts, we can do fine on the outside. But if it's the trade thing, plus the global weakness, plus the slowing here domestically, that's a different story. And by the way, it means more than one cut.
But also, if it's a trade thing, why price it in as such certainty today when we're going to have the G20 meeting in a couple of weeks? Why, if it's a trade
certainty
thing,
can change.
I know we're going to know a lot more.
The Fed certainly in this era is more sensitive to the fact that it operates through the financial markets right into business confidence, and it's not really about 25 or 50 basis points affecting employment or really immediately juicing inflation or anything like that. It's about sustaining business activity through this soft patch, if that's what we're at.